Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on Nasdaq. The NDX has been the barometer for U.S. large-cap growth and also one of the best-performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining us this Wednesday afternoon, we have Ryan McCormack, factor and core equity strategist at Invesco, to discuss Nasdaq-100 weekly performance. Of course, we'll also get some insight into the first rate hike we've seen in quite some time. But Ryan, I think really the story continues to be the velocity of the moves that we're seeing in the Nasdaq-100, and certainly your weekly chart shows that.
No, absolutely, and it's something that we've been dealing with over the past number of weeks. Right, volatility seems to be here to stay, but the difference of this week is that we saw some green on the board, and more this morning. Although this afternoon, another great example, we saw a pairing of gains and then another slight rebound. But over the course of the last week, QQQ and QQQM up 1.46%. That underperformed the S&P 500 up 2.26%, and the S&P 500 value up 1.91%. But to your point, geopolitics and the Fed remain at the forefront of investors' minds. Despite kind of all the atrocities and within the conflict in Eastern Europe, there is renewed hope for a peace deal between Russia and Ukraine. Separately, there's some optimism today around China after a promise to ease some of its regulation or the regulatory crackdown that we've seen on the real estate or property stocks and technology stocks within the equity markets. And then about an hour ago, we had the long anticipated Fed liftoff. So just a lot of dynamics and a lot for investors to digest.
Yeah, the Chinese technology stock move was quite something on the overnight. Let's take a look at sector performance. What relatively outperformed for us this week?
Yeah, so in terms of cues, you have energy taking a pause this week. It was down over 7.4%. We saw oil prices back off. We've had calls for increasing the supply of oil globally, becoming louder and louder. All other sectors within QQQ and the S&P 500 ended up in the green for the week. Financials was the best performing of all of them. Of course, that weighed on QQQ performance as there is no financials exposure, but no surprise there in anticipation of Fed liftoff today and higher rates. But as we were saying, I think it's interesting to look at some of the Chinese stocks. So over the past week, you have names within QQQ like NetEase down 12%, Baidu down over 20%, JD.com down over 20%, Pinduoduo down over 31%. Lots of downgrades and pessimism around the sector. Now, after the announcement today and some of the comments from China, we saw a tremendous rally both in the overnight and then here during the session today. Pinduoduo up over 48%, JD.com up over 30%, Baidu up over 26%, NetEase up 19%. So more volatility but it's nice to see a rebound in some of those stocks after the comments.
Yeah. It certainly is nice to see some green back in the Nasdaq-100 for sure. And then, Ryan, I think this next chart here is really interesting because you provide some historical context with the averages and rate hikes.
Yeah, so today, as you had mentioned, no surprise, the Fed lifted off by 25 basis points. Maybe a little surprising if we looked a few weeks back where it seemed like 50 basis points was starting to get priced in, but 25 basis points in the hike. The dot plot shows the remaining 6 meetings this year will likely include a rate hike. In the press conference, just some highlights. Chairman Powell noted that the economy is well positioned to withstand tighter monetary policy, seemed to signal that the committee is in agreement for the need to restore price stability. After some of these comments, it seemed as though, after the equity markets had paired some of their gains, we kind of rebounded on renewed optimism around his quotes on the economy. But, they did lower their GDP forecast to 2.8% from 4%. They noted, some of the risks directly related to the Ukraine war, higher oil prices, et cetera. And then, still noting that inflation is likely to come in at around 4.3% this year, but in the second half, 2023, 2024, we should see inflation ease a little bit. But the chart here just shows the last Fed rate hiking schedule. So from mid-December 2015 through July 30th, 2019, which was the last day before the Fed hiked. we saw liftoff from 0 up to 2.25% to 2.5%. And the point here is that a rising Fed funds rate doesn't necessarily spell catastrophe for the stock market or even growth stocks in general. And as you look at this chart, QQQ actually outperformed the S&P 500 throughout this time frame by over 20%. Total return of 78.83% versus 58.67. So, if the Fed rate hikes is in response to healthy economic growth and trying to stem inflation without putting the brakes too much on, again, doesn't necessarily spell catastrophe for the stock market.
All right, Ryan, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.